Okay, moving on to Wednesday now. What will I be having a look at for Nasdaq? And I can say pretty safely already, I'm not going to be taking any trades or whatsoever today because we've already gone. We're up 8% now, but we've already moved 1.5% in the market, and we are putting back now just on the lead up to New York. But the reason I'm not going to be in any trades is, first of all, I'm not going to be in a short position because I am not shorting a market which looks like this, because it's just you're putting yourself on the other side of the market and betting against it, and I think that's lower probability, and especially in conditions like this where there is no significant buy side liquidity coming into New York session which could be taken. As you can see, we pushed up very aggressively in London, took the previous day high, took Asia low, Asia high. And for my strategy, there is no buy side liquidity of significance to even look for a short. And contextually, it's not a situation right now where I'd be looked to be taking a short from. Now, in terms of longs, we are still quite a while away from any buy side liquidity down here. We've got the Asian range low, we have London low. However, even if we were to somehow move down, between a half and a full percent to run out these two swing points down here, I still wouldn't want to be looking for a long, because after such an aggressive expansion through London session, which we had, the odds of us pulling all the way back down, running out these swing points, rejecting these swing points, and then delivering another expansive, aggressive move to the upside is just low. Typically, you don't see that much volatility inside of one day. If you want to be looking for things like longs, then you need to have the better context. Like Monday, for example, what did we get? We did get a swing failure pattern on Monday evening, and okay, I know you can't hold on these futures for prop firms over the rollover and whatnot, but just giving you an example, for longs, right, you need the context to be correct. And what we had through Friday evening to Monday morning is we were consolidating, and then we pushed lower into discounted price. We took out this swing point, we rejected this swing point with this 5 p.m. candle showing that price doesn't want to accept this discount pricing and that we might push up. And we have plenty of sell side liquidity grouped relatively equal highs above us, as well as the fact the market is just bullish. So that is and so if you positioned yourself down here, then eventually your move would have played out, and you would have been in a good position to be ready and for an expansion, and the market was in a position where an expansion was likely in the coming days. But because of today, we have ran out, we've already had such an aggressive move and run out all the liquidity above us. There is nothing to hunt now above us anymore. And so us dropping all the way back down doesn't make, and to getting along then, it doesn't really make sense, because the move of the day in my model, what my model says, the move of the day has kind of already been completed now. So now you'd be looking for a continuation of the aggressive move. For me, looking for longs into tomorrow, into Friday, I'd need this to kind of reaccumulate a little bit. Maybe we do push lower today in New York and reaccumulate going into Thursday, or something, and we can leave some obvious sell side, some buy side liquidity, sorry, that we could target. That is a type of situation where I could look for longs. But when we've already run out all the buy side liquidity and been very aggressive in today's expansion, there's just nothing high probability left for me. So I'm probably going to be sitting out of this market yet again, but that is okay.